Welcome to my channel. So before we get started, make sure to hit that like button, also subscribe to my channel. In this video, we will talk about top 10 ways to make passive income. So make sure to watch the full video. 1. Dividend stocks. One way to build an income stream is to invest in dividend stocks, which distribute part of the company's earnings to investors on a regular basis, such as quarterly. The best ones increase their payout over time, helping grow future income. Dividend stocks typically are less volatile than growth stocks and help diversify your portfolio. Investors can also choose to reinvest dividends. Say you buy 100 shares of a company for $10 each, and each share pays a dividend of $0.50 annually. If you invested $1,000, you would receive $50 in dividend payments over the course of a year. That works out to a 5% yield. Not too shabby. What you choose to do with your dividends is up to you. You can reinvest them to buy more shares of the company. Buy stock in a different company. Save the cash. Spend the money regardless of whether the company's stock price goes up or down. You would receive those dividend payments as long as the company continues to disperse them. The beauty of stocks that pay dividends is that part of your return includes predictable quarterly payments. Not every company offering dividend stocks can maintain a dividend payout in every economic environment, as the COVID-19 pandemic has demonstrated. But a diversified portfolio of dividend stocks can produce reliable income rain or shine. Combine those dividends with capital appreciation as the companies you own grow in value, and the total returns can rival and even exceed those of the broader market. 2. Dividend index funds and exchange-traded funds. You can also invest in index funds or exchange-traded funds that hold dividend stocks rather than picking and choosing individual stocks to buy. This is a form of passive investing for those who prefer a more hands-off approach. Index funds hold a well-rounded selection of many stocks that aim to mirror the performance of a given index, such as the S&P 500. A dividend index fund will invest in a selection of stocks that pay dividends. Index funds can help balance portfolio risk, as market swings tend to be less volatile across an index compared with individual stocks. Dividend ETFs offer the diversification benefits of index funds while mimicking the ease with which stocks are traded. To invest in dividend stocks, index funds, ETFs, or other publicly traded assets, you'll need to open a brokerage account if you don't already have one. 3. Bonds and bond index funds. A bond index fund is a firm that buys bonds to match an index. It then creates securities from the bonds and sells them to investors. The index fund is designed to match the performance of an index, such as the Barclays Aggregate U.S. Bond Index. You can buy index-related products like bond mutual funds, or you can choose from the growing number of exchange-traded funds, ETFs, traded through a broker. These products are a simple and cheap way to invest in bonds. Bond index funds are highly diversified, have low fees, and use an approach that's easily understood by most people. Bond index funds may well be a leading option for those who want to earn income from their investments. A bond index fund is a firm that invests in a portfolio of bonds designed to match the performance of a particular index. Index funds are passively managed, which means they have lower management fees. Index funds perform more consistently than actively managed funds. 4. High-yield savings accounts. Another way to earn passive income, albeit at a lower level than stocks and bonds, is a high-yield online savings account, which can be ideal for growing your emergency fund. The interest paid by savings accounts is added to your balance. High-yield accounts are a type of federally insured savings account that earns an interest rate that's often much higher than the national average. The APY of these high-yield accounts may vary slightly, and over time, those small differences add up to real cash, so it pays to shop around for where you put your savings. 5. Rental properties. Purchasing properties to earn rental income is another way to build passive income. Long-term rentals can provide a reliable source of cash if they are located in a healthy market for renters, but they also carry long-term stressors like maintaining those properties, as well as paying multiple mortgages, property tax bills, and other costs. You could also focus on short-term rentals through a platform like Airbnb, which is dependent on a steady flow of visitors to your area. Or start small. Rent out a room in your house to begin to bankroll your rental property empire. 6. Peer-to-peer lending. Real estate investments are long-term bets to build passive income. If you want to potentially earn income and cash out your investment in under 5 years, one tactic to consider is peer-to-peer lending. An alternative to traditional bank loans, peer-to-peer lenders like Prosper and Lending Club match investors who are willing to lend money with borrowers who are vetted by the platforms for creditworthiness. It's riskier than putting cash in a high-yield savings account or money market fund, but also potentially can earn more interest, as much as 5% or more. 7. Private equity. Perhaps the original form of peer-to-peer lending. Another common form of passive income is funding a private business you believe has the opportunity to generate future income. For high net worth individuals, this might be investing in private equity funds, which are typically only available to accredited investors who meet certain net worth or income requirements. Another way is to back a family member, friend, or other trusted partner to help fund their business with an agreement to earn returns from any future profits. But beware, no matter how large or small, investing in a single business is an inherently risky long-term bet. Never invest more than you can afford to lose. 8. Content. A way to build passive income at home is through payments for the use of intellectual property that you have created yourself, or for which you purchase the rights. Creating content can be a lot of work, especially for work that is engaging and reaches a large enough audience to generate income. But once you've created something that people are using, it's possible to generate revenue through display advertising using a program such as Google AdSense, or to run sponsored content, which means companies pay you a fee to publish a post on your blog. Another way to monetize a blog is affiliate marketing, which allows you to earn commissions if your readers purchase a product or service you've recommended or linked to. You may, however, find that creating content is not as hands-off as you might expect. There's always pressure to create more content or update what you have to keep it viable. 9. Real estate investment trusts, REITs. A real estate investment trust, REIT, is a company that owns, operates, or finances income-generating real estate. Modeled after mutual funds, REITs pool the capital of numerous investors. This makes it possible for individual investors to earn dividends from real estate investments without having to buy, manage, or finance any properties themselves. A real estate investment trust, REIT, is a company that owns, operates, or finances income-producing properties. REITs generate a steady income stream for investors but offer little in the way of capital appreciation. Most REITs are publicly traded like stocks, which makes them highly liquid, unlike physical real estate investments. REITs invest in most real estate property types, including apartment buildings, cell towers, data centers, hotels, medical facilities, offices, retail centers,